Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the last week of October and the first week of November. And oh boy, we are finished with October, but we are starting November with a huge push to the upside. We are going to review all the economic data. That is the reason why we are pushing so hard into November. Reviewing the FOMC decision, what Powell said, the last earnings from Apple, and also interesting data for interest rate probabilities and also the earnings details that are pushing the forward EPS higher for the S&P 500. So stay with me because this one is going to be really interesting. If you are watching, if you are expecting to be a huge bull into November and into the end of the year. So stay with me because this video is going to be full of details and expectations forecast for next week and the end of the year. So first, starting with economic data. On Monday, we got the manufacturing index continuing lower in the negative territory. That's a nice tick for the Fed. Employment costs on Tuesday got a huge push as expected. So wages were a little bit flat, cost benefits were flat, and cost index were flat quarter over quarter. That's good for the wage pressure. We are not spiking in employment cost. Case-Shiller month over month came lower and year over year came higher. So mixed sentiment here. But look at this, Chicago PMI went lower than the previous one and lower than the expected. That's really good. And also consumer confidence came in lower than the previous one, not as low as expected. So these show signs of the spending, the confidence of the consumer cooling down. What else? On Wednesday, we got big data on ADP employment. Look at this, 113 below expectations on 150. On Wednesday, market started going nuts with this data. Manufacturing PMI came as expected, not cooling down, but flat on 50. 50 means no expansion, no compression, as expected. Manufacturing PMI ISM came way lower than expected, and this was a very nice push. JOLTS openings, look at this, 9.5 million. We were expecting 9.25, so labor market remains tight with a lot of opportunities. But manufacturing employment, 46. We were expecting 50. So way lower than expected and showing signs of cool down of the economy. And finally, the Fed interest rate decision. We are going to cover that once I finish with the economic data for the week. A lot of details on this one. But as you can see, Monday, Tuesday, and Wednesday, plenty of good economic data. Thursday, initial jobs claims, 217,000. Higher than expected and higher than the previous one. A nice tick for the Fed. More people becoming jobless. And non-farm productivity and labor costs came in higher than expected on productivity and lower than expected on the cost. A nice combo that ticks markets' expectations. Really good day also, Thursday. And finally on Friday, non-farm payrolls and unemployment rate. Look at this. Unemployment rate ticking higher, 3.9 versus the 3.8 expected. And non-farm payrolls came way lower than the previous one and than expectations. Average hourly earnings, 0.2, less than expected. Hourly earnings year over year, 4.1, less than the previous one. A good participation rate. And the S&P Global Composite PMI and Services PMI cooling down a bit, less than expected. And finally, Services PMI cooling down also. A lot of ticks for the Fed. So basically, this week was tremendous for the bulls and tremendous for the Fed. We are seeing a lot of signs of cool down on several sectors. And what Jerome Powell said, it's quite important. Because basically, on 1st November, Powell said that we are prepared to adjust policy further, obviously, adjust policy if risk emerge. The decision of pausing was unanimous. We are still above expectations, and the economy has expanded above everyone's expectations thanks to the consumer spending supporting the economy. Just check the last reading on the GDP growth because that's quite huge. And we are moving carefully. These signs a lot of that interest rate cuts are at the horizon. And people are really looking into that. We are going to see that on the interest rate probabilities because I think markets are a little bit positive on when interest rates cuts are going to come, but we will see. There's a long way to get inflation down to the 2%, and finally, further interest rate hikes are going to be warranted if the progress on inflation is at risk. And right now, this week, data show that there's no risk right now. We are seeing signs of cool down, and the markets are celebrating. The Fed didn't put a recession in the forecast. And that's really important. No hard landing, no soft landing, no anything. Just no recession. Consumer spending and indicators on labor market are showing that the economy is strong. The financial sector is strong. And what we need to do is just relax on inflation, relax on prices, and we will be good. We are not thinking about rate cuts. Fed Powell insisted that they are not talking about that. They still believe that it's likely we'll need to see slower growth to softening in labor market conditions. So when we talk about that, we need to see basically look at this 525, 550 on interest rate probabilities until March. Remember that we were here starting on interest rates cuts here on June, July. Now markets are predicting 1, 2, 3, 4 times 25 basis points, 100 basis points interest rate cuts next year to be at 425, 450 at the end of 2024. That's a quite aggressive probability. I don't think this is going to be that way. These two guys were supposed to be here, and market is just moving here and pricing in a lot of interest rates cut every single FOMC next year. So maybe markets are ahead of themselves. We don't know yet, but markets change the sentiment. The recent economic data showed that the economy is cooling down pretty heavily, and they are basically scared. They need interest rates cut to support the economy. I'm not that positive, and we will have to see into the end of the year and in the next FOMC on 13th of December what happens, what Powell said, and the dot plot. The dot plot for the economy forecast from the Fed will be really, really important. Now that we covered the economic data, the huge, big, green, and good economic data for this week, and we covered what Powell said, let's just take a look at what earnings said. So basically, overall, AMD huge, PayPal huge, Palantir huge, Shopify huge, and Apple. I would like to take a good close-up of Apple because investors were quite scared. Due to the weak outlook, basically based on China, lower demand than expected. But let's analyze what they said. So mainly 146 EPS, that's a bit, and revenue 89.5 versus 0.28, that's a bit. iPhone revenue flat. Mac revenue lower, way lower than expected. iPad revenue bit. Wearables lower. Services lower, and gross margin quite high. So there are certainly things that are going south, like Mac revenue, wearables, and services, and people are really, really worried about these ones. The iPad is closed, but I think this data, coupled with the fact that Tim Cook said that obviously with China lower demand as expected, Apple devices are going to suffer on revenue. But let me tell you, investors were a little bit worried on the day, on the night of from Thursday to Friday. But on Friday, Apple helped a lot to fuel the huge bull push on the Nasdaq, sorry. We are going to see that on the charts. We are going to see how Apple pushed on Friday and squeezed all the shorts, not only on Apple, but also on the technicals from the overall daily chart on the Nasdaq. That's going to be beautiful. But first, last thing from fundamental analysis. This is the earnings insight that came out on November 3rd, 2023. Really important. And look at this, because this data is what investors are saying and why they are jumping this heavily on the investment part of the equation. Earnings scorecard. 81% of S&P 500 companies reported actual results, so basically everyone, with 82% of them positive EPS surprise, and 62% of them reported positive revenue surprise. Investors are looking at this number, 81 and EPS. And if you know what forward EPS means, we are at a quite decent level here. We got a lower high, we got a higher low. The markets are wedging on the S&P 500, and the black line is the forward EPS, the 12-month forward EPS. We are right at 17 or even 16.8. That's the average in the last 10 years. And this is a good price for investment. This is a really good price. Look at this, 70.8 in the forward P ratio. Is below the 5-year average of 18.7, above the 10-year by a little bit, but this is causing a lot of investors, a lot of long-term big players and participants to really put money on the S&P. And we are going to see that on the dollar. Dollar is getting a lot of outflows. Friday performance on dollar was really, really red, and people are basically moving cash into the equities, S&Ps, Nasdaqs, into the end of the year. And this, coupled with the fact that economy data was good, oh boy, we pushed the market really, really heavily on Friday. Let's now move with the technical analysis. This is going to be really, really important for you to take into account. This is the monthly chart on the Nasdaq. Monthly chart on the Nasdaq. 1 month, 2 months, 3 months of basically pullback. Look at how this looks like a bull flag on the monthly chart. And after 3 months of low candle, low performance, this candle is 3 days of November. Look at where are we. We are already here at the 1/3 of the top of the previous month. This in technical analysis, it's really important. The performance of November with just 3 days over performing compared with the previous month is just crazy. Now, as I was saying, we got a nice bull flag. So investors are really watching the high of the previous one to just jump in like crazy. This is on the monthly chart, really high time frame. Let's go to the weekly. This is also long-term investment. Swing traders swing on the weekly. Look at this squeeze. Last week, this is the blue dot line as always, last week high, squeezed. And we are coming into the directly, I was really surprised with this push. We are coming to the descending resistance on the weekly and also on the daily. This is the chart that you are looking for. Look at where we bounce. This is the 200 moving average on the daily. We bounce off that. I was watching this zone of previous support and might become resistance on this day. But look at the squeeze, big push. And then I was talking about that on Wednesday video. Look at Wednesday. I was watching for this kind of move. That's your usual performance on the stocks. A pullback, key level, and then push higher. But no, Nasdaq started gapping up overnight. So then I was watching this pivot and also last week high. I talked about this pivot on Thursday's video. We closed above and look at these two moving averages. The purple one is the 20 on the daily and this blue line is the 45. Really squeezed on Thursday. And on Friday, I was really interested also on this pivot. This pivot was way above my expectations at 15,138. It got squeezed also. Look at this performance. From the start of the week, that was Monday start, until the close, 842 ticks, points, 5.88 on the Nasdaq. Unbelievable. Only on Friday, we moved almost 200 points. And on the 30-minute chart, that was clear as hell. We are leaving gaps behind. This is the squeeze on the week. Gaps, as always, are white boxes. We are leaving these gaps. At some point, I think we are going to test those. And this one is really going to be really important because we have the blue line, the pivot on the daily. But if you think about the squeeze higher, this zone was really interesting. Really, a lot of shorts were here. And on Friday, we squeezed them. Every single day after economic data, more and more volume came in. And this volume was crashing every single resistance level until we are just, look at where we are here from the resistance on the descending trend line. So let me tell you, we have to be patient at this point. I'm going to do the forecast later on in the video, but right now let's talk about the outflows, because look at Friday. Friday, we got the squeeze on the unemployment rate and NFP. We got the pullback. This is prior's high, Thursday's high, closing the gap and squeezing higher. Look at this move. Unbelievable move. But obviously the rejection on the daily level was pretty hard. Look at this rejection. So I think a lot of people into the late afternoon started just taking profits. But look at this slowly grind. So grind and grind and grind. Not a single low into this level. So I was watching this on my mobile platform. Oh boy, I didn't take a position, but this is the kind of squeeze that everyone was expecting. The squeeze on high of day again into late afternoon with negative cumulative delta. This was basically people intraday shorting the market and slowly being stopped out and squeezed by bigger time frame participants. I was talking about investors, long-term investments. People were just shorting into the Nasdaq, and big investors were putting higher and higher bets, pushing the Nasdaq higher. This is why the Nasdaq became so slow, because people were just being squeezed slowly, like a frog in hot water, until we peaked, and into the close, we just took profits. Really, really big day on Friday. Interesting. If you are putting all these pieces together, we just understand that there's a lot of money coming into the market. Dollar, it's being destroyed. Look at this candle on Friday, minus 1%. This is the biggest candle since here on July last year. Since then, the dollar was pushing higher. This was the pullback on equities, but I have a lot of levels on the dollar. Try to find support for when the squeeze on the equities was going to stop, but no way. Starting with this rejection, coming to the gap down on Thursday, we tried to hold a little bit on this candle, but then on Friday, this level didn't hold, this level didn't hold, this level didn't hold, this zone didn't hold, and we closed at lows. Closing this low, it's unbelievable bearish. So this is good news, because if dollar just jumps up and then continues lower, this is going to provide the strength needed for Nasdaq to really do things like this. This is my forecast for November. After this squeeze and the amount and the volume that is coming in from everyone, from short-term investors to intraday traders to investors, swing traders, big money is coming in, and we failed 4 times. But let me tell you, I think with this increase, look below 200 support, big push, squeezing all shorts. Oh boy, we need to be patient to find a proper entry or the big squeeze into the end of the year. This is my forecast. A big squeeze into the end of the year to, who knows, 16,000? Let's analyze now the individual tech stocks. Apple, let's take a look at the 1 minute. I was really watching this. This was the earnings closing lower 3%. And since the open, I was watching Apple and dollar, and I was getting this feeling about we are going to move way, way higher today. We are going to squeeze all people that are short. Look at Apple. Apple really recovering and just finishing the day 0.52 in the red. We started 3% down, gapping down. So this push helped, obviously, the Nasdaq to maintain the squeeze and do what it did. We closed that gap down, and we are at a critical level of resistance. Prepare for squeeze. Maybe Microsoft, with its AI Copilot Office product, squeezing these guys and closing above this level. Oh boy, maybe we are pointing towards all-time highs 366.78. Wow. Tesla has its own catalyst with the UAW and all the things that are happening in that sector. So we got a little bit of issues, but I think we need to see this gap close. It depends if the strikes are going to continue and maybe drag down Tesla even more. But Tesla is just Tesla. So for now, we just need to enter the gap to provide a little bit of strength to the Nasdaq. Amazon squeezing. This gap is done. This gap was done on Wednesday. I wanted for you to see that this gap that I was watching, it's already filled. We are at this pivot right now that I'm going to obviously mark because this is quite important. And we have this is not a gap, but this free space. So we might see these two moving averages moving higher, perhaps some consolidation, and then on this zone to look for August 2020 level at 144. Amazon also looking pretty bullish. Google is entering the earnings gap down. I'm going to adjust the gap because this gap it has also the moving averages. It's not ideal, but I think Google with AI mania that we are going to see also in Nvidia, it's able to do that. So we need some kind of slow grind through here. If we reject instantly, maybe we are not that bullish. But if we start moving slowly, grinding higher into the gap, oh boy, people is going to be really scared. The people that were short in this gap. Nvidia, well, good news for bulls. The head and shoulders failed miserably. Look at this bust. I'm going to remove the head and shoulders. I know a lot of people were really interested in seeing resolution. I was watching Nvidia for long term, at least at these levels, 366, or even coming to the 200 moving average, but that didn't happen. Well, that was my setup. It is what it is. Sometimes you lose one of those, but let me just warn you about something. We have some daily resistance here. Prior tests of all-time high got this huge move down. And the thing is that Nvidia is to report earnings yet. So I think it all depends. Market is going to push to the extreme waiting for that number. If that number comes, we are going to see all-time highs. That's for sure. If you are willing to risk this into this ratio, I don't think maybe it's 1.5 ratio. I don't know. I would prefer to not trade the earnings with options and just wait for this zone to resolve. We have the descending trend line and we also have the horizontal level of rejections and also previous all-time high. Nvidia is plenty. It's full of resistance. We have earnings, but it's your choice. I think Nvidia is going to crash earnings. And I think Nvidia is going to break out, but I'm not jumping in the middle of nowhere. It looks bullish to maybe fill the gap, and maybe you can take a partial position down here at 423 into the resistance, into the earnings, and into the breakout of all-time highs. That's a better setup into my eyes. Finally, Meta. Look at this candle. This candle supporting on the close, the trend moving higher, squeezing all these people that went short on Meta. Good earnings. Don't forget, Meta got good earnings. And we are just at this level that I was watching. So I would prefer for Meta to wait a little bit of weakness, perhaps keep this close, keep this candle protected, and then move higher and into November 2021 level 328. We tried one time and we failed. So as you can see, every single stock but Tesla is really bullish for next week. We got good fundamentals. We got money pouring into the Nasdaq, into the equities from dollar. We got good technical analysis. And we also got the final monster in the house. Look at the Russell and the small caps. I was watching, and I mentioned that I mentioned this in 2 of my videos at least. Look at this low. This low was just buy. You have to buy this low. If you are investing long term, you have to buy this low. And look at what happened. 2 gaps, and just pushing on the week almost 7%. Wow. This is one of the reasons, apart from the fundamental good data that we got, this is one of the reasons why the market pushed this higher. It was not only the tech stocks, it was also financials. Look at the last day performance of financials. Look at banks, regionals, 6%, 4%, 5%, 4% on the big guys, almost 4%, 3%, 3%, 1% JPM. I mean, XLF performance was insane. Look at this V reversal. This is insane. So this week was big push. And you have to take that into account to really see from where we are coming. And we are coming from strong financial sector, strong small caps, strong Nasdaq tech stocks, strong fundamentals, and good setup on technicals on the daily. And don't forget about that. Well, let's talk about Russell finally. So look at where is Russell. Russell is just the next big thing is the 200 moving average. I think we are going to fill this gap and continue higher towards that. My target is obviously for a big strength demonstration is just this 200. I don't think we are going to just go there directly, but who knows? But the best thing for us is just fill at least partially some of these gaps and continue higher. Finally, I'm not going to talk about anything else, just a recap. The monthly that we are starting is one of the strongest setup that we have for bulls. This bull flag on the monthly, it's really going to be key for the end of the year. I think a lot of investors and hedge funds are looking into this. And we have fundamental data good. We have good earnings. So what else do we need? We have inflows. This bull flag is really your opportunity. I think, in my opinion, it's our best opportunity to really push this market into highs, year-to-date highs. 16,000 is my forecast for the end of the year. I'm going to say this because there's a lot of pieces for us to be confident. Again, strong fundamental data, strong earnings. We checked that forward EPS and we are confirming that investors and high time frames are putting money in. Friday was negative delta. A lot of big players were putting orders while a lot of intraday shorts were putting more and more and more, and they were squeezed. They got squeezed completely. Look at this performance. We got financials being strong, small caps. We have everything. To be confident, we have to wait and be patient for a nice entry. We can't just jumping of whatever, I think things like this are our best opportunity to jump in this train that I think for the fourth time, the fifth time is going to do it. I'm quite confident about the end of year performance, and that's why I'm saying 16,000 NQ end of the year. And that's all from my side. As always, pretty long video, but I put a lot of details in these videos, a lot of effort, and there's a lot of information for you to really check, double check yourself, compare with your analysis, and take your plan for next weeks. That's why I'm doing these videos on the weekend, because you can really review them slowly and prepare for next week. And that's all. I do these things every Saturday, every week. And also I do every day, every trading day, a video. I upload a video for market forecast, market updates, and market recaps every single day. So if you found these videos useful, please give them a like, subscribe to the channel. I upload a lot of content, and thank you for the support. I hope these videos are really interesting for you, and I hope you are learning, and at least you are getting some insight, some useful information for you to take your actions. The most important thing: patience, discipline, and risk management. Those skills are going to be your key to success in this market, in trading career. So enjoy the weekend, prepare for next week, because we are on a train that is going to move really farther. So we are just going to try to jump on this train at the best spot for us, managing our risk. And I think we are going to go nuts in November and into the end of the year. So be prepared, stay safe everyone, and see you on Monday.